and welcome to The Explainer. Today, we're going to tackle a topic that's absolutely key to global business: how companies make and receive payments safely across borders. If you've ever wondered how a business in one country can confidently sell to someone thousands of miles away, well, this is for you. We're going to walk you through exactly how it all works. Let's get started. So let's set the scene with a basic challenge here. Imagine you're a seller. You've got an exciting order from a buyer on the other side of the planet. It's great news. But then you start to think, do you ship the goods first and just trust that you'll get paid? Or do you ask for all the money up front and hope they trust you enough to send it? This is the classic problem that sits at the heart of global trade. And that right there is the big question. How do you close that gap of trust and distance? In this explainer, we're going to break down step by step the different ways businesses solve this exact problem, turning all that uncertainty into a secure deal. We'll look at the tools they use to make that global handshake happen. To really get a handle on this, it helps to think of international payments as sitting on a kind of spectrum, or a sliding scale of risk. At one end, everything is super safe for the seller. At the complete other end, it's the buyer who has all the protection. Every payment method we're about to discuss falls somewhere along this line. And here are the two extremes of that scale. On one side, you have payment in advance. The seller gets the cash before the goods even move. For them, it's zero risk. But for the buyer, it's a huge leap of faith. Then, on the other side, you have an open account. The seller ships the goods and basically just sends an invoice that says, "Pay me in 30 days." The buyer has all the power. They can even check the goods before paying, but the seller is completely exposed. So you can see the problem. We need something in the middle. So this brings us to our first middle ground option, something called a documentary collection. This is where banks step in to act as, well, trusted go-betweens. Here's how it works. The seller ships the goods, but holds on to the really important shipping documents, the papers that prove ownership. They give those documents to their bank. That bank then sends them to the buyer's bank. The buyer can only get those documents to claim their goods after they've paid. It's a much safer system. But, and this is important, the banks are just handling paperwork here. They aren't actually guaranteeing the payment. Now, if you want the highest level of security, you move on to what's often called the gold standard in trade payments, the letter of credit, or LC for short. This is way more than just banks passing around documents. An LC is a formal, binding promise from the buyer's bank that it will pay the seller. As long as the seller can show all the correct paperwork, proving they shipped the right goods to the right place on time, the bank has to pay. The bank's promise replaces the buyer's, and that's what makes it so secure for everybody. Okay, so those are the traditional methods, but the world of trade finance doesn't stand still. New technology and clever financial products are creating a whole new toolbox for businesses. And this is really important because today, a lot of trade happens on those open account terms we talked about, which means sellers are always looking for better ways to manage their cash while they wait to get paid. One of the really popular modern tools is called supply chain finance. Let's walk through it. So, step one. The seller ships the goods and sends their invoice to the buyer. But instead of waiting, say, 60 or 90 days to get paid, they can take that approved invoice and sell it to a finance company. Step 3, the seller gets their money almost immediately, minus a small fee. Then, the finance company just waits and collects the full amount from the buyer when the invoice is actually due. It's a brilliant way for sellers to get cash quickly without squeezing their customers. And of course, you can't talk about modern finance without talking about tech. We're seeing more and more innovation here. Things like digital currencies are being looked at for super fast global payments, though there are still risks to figure out. Artificial intelligence, or AI, is becoming a huge help for banks, automatically scanning all that trade paperwork to spot mistakes or even fraud. And then there's blockchain, which people are exploring as a way to create one shared, unchangeable record of a product's entire journey. Okay, with so much money and so many goods moving all over the planet, it probably won't surprise you to hear there are also some pretty big risks involved. Being successful in this world isn't just about making a sale. It's about being smart and protecting your business from all the things that could go wrong. So let's break down the main types of risk you'll face. First, there's country risk. The chance that political or economic problems in your partner's country could mess up the deal. Then there's commercial risk, which is the simple risk that the other company just doesn't hold up their end of the bargain. Currency risk is a sneaky one. The exchange rate can change between when you sign the deal and when you get paid, which can eat into your profits. And finally, you have the really serious one, trade-based financial crime. This is something everyone in trade needs to be aware of. Because international trade is so complex, criminals can try to exploit it to move illegal money. They might create a whole set of official-looking documents, invoices, shipping records, everything, for a shipment of goods that doesn't even exist. It's a phantom shipment, created just to make a huge illegal payment look like a normal business deal. So, with all these risks, what's the best defense? Honestly, it comes down to something very simple, but it's absolutely crucial. Do your homework. Before you get into business with any new partner, you have to check them out, vet them. Use every tool you can, government resources, credit agencies, to make sure you know exactly who you're dealing with. That due diligence is your #1 shield. All right, we have covered a ton of ground. So let's wrap up by boiling this all down into some clear, practical advice that you can actually use whether you're running a small shop or you're part of a massive corporation. If you run a small or medium-sized business, listen up, because this one's for you. The big takeaway is to seriously look into supply chain finance. For a growing business, cash flow is everything. SCF is a tool specifically designed to get you paid on your sales almost right away. That frees up your money so you can invest it back into your business and keep growing instead of just waiting around for checks to clear. Now, if you were on the other side of that equation, a big, established company, you have a different kind of power. You can actually work with banks to set up these supply chain finance programs for your smaller suppliers. Because you're a big, reliable customer, the financing deals they get will be much better. This helps keep your suppliers strong and healthy, which makes your entire supply chain more reliable. It's a true win-win situation. And finally, for absolutely everyone involved in trade, from the buyer to the seller and everyone in between, the message is this: learn the rules of the road. You should know about things like Incoterms, which are the official rules that define who is responsible for what at every step of the journey. When you understand the rules and all these payment methods we've talked about, you can make a smart choice that balances your need for security with the cost and effort involved. So we've gone on quite a journey here, from simple cash and advance deals all the way to AI-powered finance. The world of trade never stops changing. And as technology keeps making the world feel smaller and business move faster, it leaves us with one less thing to think about. What do you think the next big idea will be? What's going to be the next thing that completely changes how we do that global handshake? Thanks for joining us on The Explainer.